Hi friends, welcome to All About Accounting. Today we are going to start with a new topic, Accounting for Partnership Basic Concepts. If you have not subscribed our channel, please do subscribe and press the bell icon to get instant notifications. Please do share this to your friends for whom this may be useful. Let us directly get into the topic. First of all, we need to know what does partnership means. So what is partnership? Section 4 of the Indian Partnership Act 1932 defines partnership as a relation between persons who have agreed to share the profits of a business carried on by all or any of them acting for all. Let me repeat. It is a relation between persons who have agreed to share the profits of a business carried on by all or any of them acting for all. To put it simple, when two or more persons agree to do a business and share the profit and losses among them, it is called as partnership. The persons who have entered into partnership are individually called partners and collectively called as firm. Now we need to know the need for formation of a partnership firm. Why do we need such kind of an organization? So whenever there is an expansion in the business, we require money and managerial person to facilitate the expansion. Partnership helps in getting both these resources. When a partner gets into the business, he brings in capital and most of the time he also actively participates in the business. Thereby both money and men requirement are met. So here we have represented the need for partnership in the form of a flowchart. Next, let us look into the essential features of partnership. So there are totally 6 essential features. Let us look at one by one. First one, two or more persons. As we previously saw in the definition, partnership is a relationship between persons. Therefore, there should be at least 2 persons to constitute a partnership. However, the central government has prescribed the maximum number of partners in a firm to be 50. The second one is agreement. In partnership, there must be an agreement between partners to do business and share its profits and losses. This agreement which is created becomes the basis of relationship between the partners. There is no compulsion as to having agreement in written form. Therefore, agreement can be either oral or written. But it is good to have agreement in writing. Next, the third essential feature is business. As we saw in the last point, there must be an agreement to do business. Mere co-ownership of a property does not amount to partnership. If 2 persons jointly purchase a piece of land, they do not become partners. In fact, they become joint owners of the property. Let me repeat. If 2 persons jointly purchase a piece of land, they do not become partners. In fact, they become joint owners of a property. But if their business is purchase and sale of land, then they are partners. The fourth essential feature is mutual agency. The business of a partnership concern may be carried on by all the partners or any of them acting for all. We have it in this definition. The business can be carried on by all or any of them acting for all. This statement has 2 parts. 1. Every partner is entitled to participate in the affairs of its business. 2. There exists a relationship of mutual agency between all the partners. Each partner carrying on the business is a principal as well as the agent for all the other partners. Relationship of mutual agency is highly important. In the absence of the element of mutual agency, we can consider that there is no partnership. Now let us have a look into the 5th point, sharing of profit. As we earlier saw in the 2nd point, sharing of profit is also one of the agreement between the partners. If 2 or more persons come together to render some charitable activity, it cannot be called as partnership. Now the last essential feature is liability of partners. Each partner is liable jointly with all the other partners and also severally to the third party for all the acts of the firm done while he is a partner. The important point to be noted here is all the acts of the firm done while he is a partner. The liability of a partner for acts of the firm is also unlimited. This implies that his private assets can also be used for paying off the firm's debt. So we have covered all the 6 essential features of the partnership firm. Next, let us learn about the partnership deed. As we earlier saw, the agreement between the partners can be oral as well as in writing. Whenever the agreement between the partners is in writing, a document is created to include the terms of agreement. This document is called as partnership deed. So the document which contains the terms of the agreement is called as the partnership deed. The terms of agreement between the partners are listed in the partnership deed as various clauses. These clauses of the partnership deed can be altered with the consent of all the partners. Now let us have a look into the contents of the partnership deed. The partnership deed usually contains the following details: names and addresses of the firm and its main business, names and addresses of all partners, amount of capital to be contributed by each partner, the accounting period of the firm, the date of commencement of partnership, rules regarding operation of bank accounts, profit and loss sharing ratio, rate of interest on capital, loan, drawings, etc., mode of auditor's appointment if any, salaries, commission, etc. if payable to any partner, the rights, duties and liabilities of each partner, treatment of loss arising out of insolvency of one or more partners, settlement of account on dissolution of the firm, method of settlement of disputes among the partners, rules to be followed in case of admission, retirement, death of a partner and any other matter relating to the conduct of business. So these are the contents of the partnership deed. Now let us look into the provision of Partnership Act relevant for accounting. First, profit sharing ratio. If the partnership deed does not specify the profit sharing ratio, the profit and losses of the firm are to be shared equally by the partners irrespective of their capital contribution in the firm. So whenever the partnership deed is silent about the profit sharing ratio, it should be shared equally. Second, interest on capital. Interest on capital is allowed to the partners only when it is expressly agreed among the partners. Otherwise, there will be no payment of interest on capital. Third, interest on drawings. Interest on drawings is charged from the partners only when it is expressly agreed among the partners. No interest is to be charged on the drawings made by the partners if the deed is silent. Next, interest on loan. If any partner has advanced loan to the firm for the purpose of business, he or she shall be entitled to get an interest on the loan amount at the rate of 6% per annum. The final one is remuneration for firm's work. Unless there is a specific provision in the deed which entitles the partner for remuneration, no partner is entitled to get salary or other remuneration for taking part in the conduct of the business of the firm. So I have summarized the provision of the Partnership Act in the form of a table. These are all the particulars and what will be the treatment when the partnership deed is silent. First, profit sharing ratio. It should be shared equally when the partnership deed is silent. Interest on capital. It should not be allowed when partnership deed is silent. Interest on drawings need not be charged when the partnership deed is silent. Interest on loan to be provided at 6% per annum when the partnership deed is silent. Remuneration for firm's work. There is no need of payment of such remuneration when the partnership deed is silent. We should also know the special aspects of partnership firm. In addition to the accounting treatment we follow for a proprietorship concern, a partnership firm has few additional features. 1. Maintenance of partners' capital account. 2. Distribution of profit and loss among partners. 3. Adjustments for wrong appropriation of profits in the past. 4. Reconstitution of the partnership firm. And 5. Dissolution of partnership firm. We will be learning all these topics in detail in our upcoming videos. I hope you understood the concept taught in this video. If you have any queries regarding this topic, you can mail it to this mail, queries2tutor@gmail.com. I have given the link of the Instagram page of our channel in the description below. Please do follow to get regular updates on accounting topics. If you haven't subscribed, please do subscribe to our channel and press the bell icon to get instant notifications. Let's make accounting simple.